Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. There is new additional data supporting the higher for longer stance. The US consumer confidence rose to 102 when economists were expecting it to fall. But I would like to highlight the Chinese yuan fixing, which has been on the rise for the past few days. Today morning, it came in at 7.1106 yuan per dollar. Good morning, JK. Does the Chinese yuan pose some risk for the Asian pairs? Do you think there may be some depreciation in the rupee as well?
Good morning, Swaraj. Chinese move, I would rather the Chinese central bank fixing, which has been higher today as well as yesterday, not very significant because I think it's been a very non-disruptive change that we are seeing, and it's also in line with the two factors. One is the US yields went up yesterday. 10-year particularly went up by almost 8 basis points, and that actually pulled up the USD yen above 157. 157 had been resisting, and now we are trading comfortably above 157. So these two factors, along with the strong US data, actually made the yuan weaker, and accordingly, even the Chinese central bank has fixed it marginally higher. What is going to happen in the months to come in yuan is still a very uncertain expectation, because there are theories saying that because the market is trading well above the fixing, eventually it's going to break higher, because Chinese economy needs a weaker yuan. At the same time, any move by them to depreciate the yuan may also irk the US authorities, and the trade friction might actually worsen. So it's not a very straightforward answer to your question. I think we will move very gradually in line with other currency, at least for the time being. Then we will take it as we approach the US elections, how bad or better the relation between US and China is going to get. That will determine. So I think for now we should not expect a big big disruptive movement from yuan. That is my view. On the rupee, yes, we will track several global factors. The yuan move is one of them. Oil price, for example, yesterday moved up by more than 1.5%. That will keep the USD INR supported in today's trading. Strong bounce from 83.02 in the last 2 days, with the importers getting more active, will also support. Of course, the US yields is another factor. FIs have become very much withdrawn from the market, it seems. At least this week, they are not seen very active in the stock market. I think that's quite logical, considering that we have a big event ahead next week. So all in all, rupee, as I mentioned yesterday, we are likely to settle towards 83.30 ahead of the weekend exit polls. Should not expect too much of a movement. Either side, of course, we know that the central bank is very much present to contain the volatility. On the yen, we did have some important statement from one of the members of BOJ, saying that if excessive yen falls are prolonged, it can be responded to with the monetary policy becoming an option. There are talks in the market that the next meeting in July, possibly there can be a change in the monetary policy, either by way of rate or by way of reduction in the QE amount. So these are slightly larger factors that can affect the dollar overall and will have eventual implication for the rupee. But for the time being, rupee, we will concentrate or rather focus on the event ahead. Therefore, market remains cautious, not inclined to either break down or break up will remain in this range at least till the weekend, unless there is some big change in the inflation number on Friday from US, which is expected to be unchanged from previous month. We have German inflation today, which could probably cement expectations of a rate cut by ECB on June 6th, unless the inflation surprises to the upside. I don't think it's a given that they're going to cut the rate. So already I would say that uh, markets are in a holding pattern ahead of these big numbers that we have in the rest of the 3 days, and in India, of course, the head of the big event. Therefore, range trading should continue, but I think we should expect big triggers on the way for the markets. Thank you.
Thank you, JK. And for rupee, of course, the path seems a little dicey. We have got the rising oil prices, weaker Chinese yuan, and of course, a strong bounce from 83 levels with an active importer interest, which has kept the rupee weaker. FIs have become dormant. Election results will be out next week with the exit polls this weekend, and it should keep them away from Indian markets till further clarity. We have got the inflation numbers from Germany today, and of course from the US on Friday. And till then, without any big changes in these inflation numbers, market should continue to be range bound. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.